Hi, welcome to Trader Compass Technical Analysis Learning Program. Till now, we are discussing about candlesticks, basics of candlesticks, how to read the values, what are different kinds of candlesticks, what is bullish candle, what is bearish candle, how to read open, high, low, close, how exactly we can understand the emotion or the trend is happening in that particular session, whether it is bullish trend, bearish trend, whether it is strong or weak. When can we identify there is a trend reversal? By using single candle and by using two candlestick formation. So let's make a note of those points. Till now we discussed about candlestick basics, and then candlestick, by using candlestick, how to find the trend and volatility. And then few reversal candles and price rejection at higher levels and lower levels by using doji, gravestone doji, dragonfly doji, and then single candle reversals like hammer, inverted hammer, and shooting star, and hanging man. The same way, two candlestick reversals like tweezer tops and tweezer bottoms, haramis, engulfing like bullish engulfing, bearish engulfing, and dark cloud cover piercing. This is what we studied till now. Now let's go to the next level, and today we will finish candlestick formation. Okay, there is three stick reversal formation, so we can identify by using three candles also, which is nothing but morning star and evening star. Morning star, evening star. There is nothing big to discuss about this. See, there are so many candlestick formations like harami cross, upward screw, downward screw. There are so many other kind of candle formations, but all are not important. I don't say that they are not helpful. I'm trying to tell you that don't try to learn each and everything in stock market, because stock market is very big and it is a big ocean. Not only you, even me, nobody can read or can study or know about the entire stock market. That is not possible at all in this life. It's a big ocean. So try to learn up to that level where you can make profits in a consistent manner, where you can reduce your loss, where you can make profits consistently, and where you can make a setup within a easy manner. Don't make it more complicated. Till that level we should understand, right? So that is what I'm going to teach you. Now, what is morning star and what is evening star? It's so simple. Let's suppose if the trend is in uptrend, that means the stock is continuously going up. Okay, now let's suppose as usual there will be a green candle. There is a green candle. Next day there is a gap up, but the candle is very small or the kind of dose. The candle is very small. See, there is a gap up and the candle is very small. So what does that mean? That means there is an uptrend, but the buyers are becoming weaker here. Okay, let it be. It doesn't matter if it is a green color or red color or with no body. It doesn't matter. But next day, see, one session is over, two sessions are over. Now we are talking about the third candle. in the next session, if there is a gap down and sellers could able to push it down, that means now they started dominating the session. See, in uptrend, green candle formed. After that, in one session, green candle formed. After that, there is a small candle with no body or small body, and then again gap down open, and there is a red candle. It is an indication for bears. Bears are trying to dominate the session. Now the stock will start falling down to the level from where it started, right? This candle formation is called evening star. See, it's a kind of star. It is all alone in the sky. So that's why they call it as evening star. Okay. Now, if you find the same, if we can observe the same setup in the downtrend, like there is a downtrend and there is a red candle. After that, there is a gap up open, gap down open and small candle, and then there is a green candle. Okay. Now look at this. Downtrend, as usual, red candle, and then gap down open, small red candle. All of the sudden, gap up open, and there is a green candle. That shows now bulls are entering into the market, or bulls are trying to dominate the session. Bulls are showing their presence. So from here, if the stock takes a reversal, then it can go up to the same level from where it started coming down, right? This is called morning star. So this is also a reversal indication. Okay. Forget about the nomenclature, it doesn't matter. See, end of the day we are working on stock market to make money, right? It doesn't matter whether you know the name or not. Try to understand the emotion. That is what I am telling you again and again. I repeat this. Okay. Try to understand the emotion. Try to understand what exactly happening in between bears and bulls, in between buyers and sellers. Who is trying to dominate? Whether the demand is more or the supply is more. Demand is more means buyers are more. Bulls are trying to dominate. Supply more means selling pressure is more. So bears are pushing it down. That's what you should understand, right? This is all about candlesticks. If you know the candlestick, how to read where is the open, high, low, close, and the trend and volatility. See, in this is confirmation trend, green trend, but their trend became very weak. Here, bearish trend, strong trend. That's how you should read trend and volatility. And then if you can see the reversal formations, then you can happily initiate the trade and make money. I'm not showing these examples because again I need to spend some time to show the charts, so you can easily identify that. And it's again a rare kind of scenario. It's a bit difficult to find the chart also. Okay. Now you should, being a trader, especially intraday trader or technical analyst or technical based on chart we are trading, we should know all these formations. Now I'm receiving few queries like what is the time frame we should use, whether 1 minute time frame is okay, or 3 minutes time frame is okay, or 5 minutes time frame is okay. Yes, friends, remember this. Any candle you use, it doesn't matter. Any candle you use, it doesn't matter, but the validity of the candle will be somewhere around 5 to 8 candles, 5 to 8 times of the candle. That means, let's suppose if you are using a 1 minute candle, then a sentiment or the emotion will be valid for 5 to 8 minutes. Okay. If let's suppose if you are using a 5 minutes candle, if you are using a 5 minutes candle, then max 5 into 80. That means you can stay in the trade for next 40 minutes. There is no hard and fast rule. This I am telling you by my experience. Okay, I may be wrong in this statement, This is what I found, I observed, and I feel the setup can valid for next 40 minutes maximum. So if you want to continue the trend or continue the trade, then you need to check it up again, fresh candle, how the market is reacting or how the stock is reacting. So if you are trading with 1 minute candle, then just imagine you need to finish your trade either in 5 minutes or 8 minutes. So that means that setup is invalid after 8 minutes. See, every minute there will be buyers, there will be sellers. So there, if the more buyers are coming, then sellers may drop, or more sellers are coming, then buyers may drop. So the emotion or the trend can change immediately. So based on the candlestick, you should decide it. If you are going with a lesser time frame, then the life in the trade will become small. If you are going with a hourly candlestick, 1 hour candlestick, then you can wait happily for a whole day or even for 2 days also. The 8 hours is the validity. That means for the whole day you can wait, or even you can carry the same position for the next day also. If you are using 1 day daily time frame, you can happily wait for 1.5 week or 1 week. 1 week you can happily wait with the position. See, that's how it changes. There is no hard and fast rule. Again, you may ask me, sir, by using daily time frame I entered into a trade, and after 2 days there is a reversal in the trade. That's good. If you find reversal, then it is better exit the position. And don't say that I'm waiting for the next 8 days or 7 days or next 1 week. As you said, that should be valid for next 5. No, there is no hard and fast rule, and nobody can give a book rule on stock market. That all depends upon your instant reaction, how you are going to react according to the market, right? So what time frame is the best? It again depends upon your own trade system, your own psychology. See, few people, they can happily wait for 10 minutes, 15 minutes, 1 hour, 2 hours also. Even if their position is a little bit red or at the same level, they can happily wait. But few people, they cannot wait if the stock is waiting at the same level, if the stock is stagnant at the same level or hovering at the same level. No, they don't have patience, they have to exit. So it depends what kind of trader you are. First you should identify yourself, what kind of trader you are. Are you a scalper? Are you a positional trader, or intraday trader, or kind of swing trader, or short term investor, or long term investor? What kind of trader you are, you should know that. You should know this. See, scalper means they close their position in max 5, 10 minutes, 15 minutes very quickly. Intraday trader, that means they may close their position on the same day or next day. Positional trader, they may close their position in just 2, 3 days, or kind of 5 sessions or 8 sessions. Swing trader, they go with the swing. If the swing starts, I'll explain you in detail after some time in our next coming classes, upcoming classes. Swing trader, so they take entry here, they wait to reach the swing at the utmost high, and when it is taking a reversal, they exit here. This is swing trader. Short term investor, they may take a position for next 2 months, 3 months based on certain criteria. Like if a rainy season is coming, they may invest in fertilizers, they may invest in agriculture kind of stocks like seeds, Kaveri seeds, or UPL kind of thing. And that's all short term traders. If festivals are coming, they may invest in clothing stocks like AB apparel, or else Page Industries, or else auto sector, as there will be more selling in vehicles, those kind of things. So short time investor, they go with a basic different idea. Long term investors, they purely goes with the fundamentals. They read kind of different things like qualitative analysis, quantitative analysis, fundamentals, debt ratios, promoter stake, this, that, and all. So first you should know what kind of trader you are. Then second point, on which kind of instrument you are trading, that is more important. Are you trading in index? If index, which kind of index it is? Is it a Nifty, or Bank Nifty, or Nifty IT? And again, is it a stock? If that is a stock, then which kind of stock it is? Is it a high beta stock or low beta stock? See, if you look at Dabur, what is that, ITC, SBI, they move slowly. If you look at Jubilant Food, Bajaj Finance, these are high beta stocks. Dr. Reddy's, they move very fast. So it all depends on which kind of stock you are trading. What is the behavior of the particular stock? See, if you are trading, if you are having a pet at your home, let's suppose you are having a puppy at your home, so you know better about the dog. Even if it makes any kind of noise, you know why the dog is barking, why it is moaning, right? The outsider may not understand that language. So if you are observing any particular stock or particular index, then you know better, or you can understand in a better way. So first, you should understand that being a trader, you should know what kind of trader you are, and you should know on what kind of instrument you are trading and how it behaves. You need to invest your time. See, I know few people who are trading only on Tata Steel, who are trading only on Bajaj Finance, and they are making money. It doesn't matter. Whenever market gives trade, they initiate a trade. Otherwise, they sit calm. I know few people who are trading in only Nifty index. They don't trade in any other. Few people they are there who sells only bank Nifty bank, and they are shorters. They don't buy, they only sell. So it all depends. Everybody is making money. Everybody is losing money also. So why they are losing money? Because of lack of awareness. If you don't know what you are trying to do, then you are going to end up with a loss. You should know what you are going to do. So I suggest, as many people are asking me, I personally suggest, see, let's suppose if you are on Nifty intraday trading, then better use 3 minutes. Don't go less than 3 minutes. 5 minutes and 1 hour chart. Take the confirmation from 1 hour chart. Entry and exit must be by using 3 minutes or 5 minutes. That's all depends on you. If you are trading on stocks, 5 minutes, 15 minutes, 1 hour, 1 day, and 1 week. Better if you can take the levels from 1 week candle or 1 day candle. Wait for the confirmation on 15-minute candle. Take entry according to that. I repeat, if you are trading on stocks, better draw the levels from 1 week candle or 1 day candle. Check for the confirmation and take entry based on 15 minutes or 5 minutes. So how do I confirm this? Based on 1 hour candle close. Hourly candle should be closed according to your levels. So let's suppose if you are trading on a stock, you mark levels on weekly chart. These are the levels. So that in the daily chart, the stock came here, and in hourly, next day, let's suppose there is a green candle, and next 15 minutes is started going up. Then according to that, you can take an entry. This will never come by just listening to this. You need to practice it more slowly, and then you can become a good intraday trader. For the positional traders or for the short-term traders, you don't need to worry about this. You just go through with the daily chart, use daily time frame, daily chart, happily sit calm. EOD, end of the day, you check the data and make the positions, and next day happily you can take entry and sit calm. For the next 5 sessions, 8 sessions, 10 sessions, it will deliver the profit whatever you are expecting. That's it. Fair enough. You don't need to get hurry-burry kind of thing. This is for intraday traders. If you are trading on index or Nifty, Bank Nifty, better draw the levels with 1 hour chart and take entry exits with 3 minutes, 5 minutes. If you are trading on stocks, then better draw the levels with 1 week or 1 day charts. Wait for 1 hour confirmation. Take entry exits based on 5 minutes or 15 minutes candles. It will come. And I am not trying to confuse you more. If you are not aware of that, you are comfortable with 10 minutes time frame, you are comfortable with the 2 minutes time frame, there is no hard and fast rule. You go according to your emotion, according to your psychology, according to your time frame. Let's suppose if someone is making a very good profits with a 4 minutes time frame and that suits to his psychology, then that is good. Let him go ahead with the 4 minutes. Don't say that some expert said that no, we should check with 15 minutes candle time frame. No, nothing is there, no hard and fast rule. If he is happily making money, ultimately whether you are winning the trade or not, that is what it matters. That is what it matters. Okay. And before closing this candlestick, I just want to tell you one more, which I already explained. I just want to repeat this. Let's suppose you have seen a green candle. That is good, it is bullish, right? If you have seen a candle with a small body and the equal size wicks, then it is weakening. You see a green candle with a big wick on higher side, even though this is green, but this is a weak candle. This is strong candle, this is neutral candle, this is weak candle if it is a green candle. Okay. And what if it is red? If it is a red candle, yes, strong, full red, full body, strong body, small body, and the small average wicks, then it is neutral. Even though it's a red candle, but bottom side there is a big wick, that means this is weak candle in red candles. So I can say that this is bull candle, clear. This is neutral candle, but this is a seller candle. This is buyer candle and this is seller candle. Even though it is green, this is completely slowly turning into selling mode. And in here, this is a selling candle, this is neutral candle, and this is buying candle. Why do I repeat this? Because the concept you should understand what exactly happening behind this candle. Then you can make more profits. Let's suppose, let's look at today's Nifty. See, today Nifty. Try to check this. It started coming down, open at this level, and open is equal to high. From that time onwards, they started dominating. Sellers dominated here. Bulls tried to go up, but not even they could cover half of this candle. Then it started falling down. See, there is a support level. At the support level, there is a formation, kind of hammer formation. Slowly it started taking a reversal. It started going down, almost reached the top. Then reversal. Slowly came down, and in the bearish trend, look at these doses, two doses. What does that mean? Trend is getting weak. Trend is becoming very weak. Yes, trend became weak. Next candle, they could buyers could able to push it up. Again, there is a fight, consolidation, fight, is a bottom again, try to go up, again dozy, pushed it down. Now here, inverted hammer, and then buyers started pushing. See, till this level, look at this, and look at this. Here, even sellers are trying to push it down, but look at the lower wicks. How strongly bulls are fighting with them. They are trying to push it up. Now slowly started pushing it up. Once this level is broken, see, at this level there is a strong fight between bulls and bears. At this level, see, they are fighting at this level where 9166, 9170. They tried to push it down, but no, buyers did not accept that, and strongly they could able to show their presence. From then it started, look the beauty. From then it went up to this level, and then it started going up. Beautiful. From where it started, this level it started, and it reached to the level. So you need to be careful where this fight is happening. If there is a fight, then you have to be a little bit cautious. Okay, once this level is broken, this started going up. This is a kind of, you know, double bottom or a W format. See, if you look at this, there is a big W. If I shift this into 10 minutes, you can see in a better way. That's why I say go for the longer time frame, then the chart will become easy. See, there is a big W, and once this W wedge is broken, look at the movement. This is a good entry here. If someone wants to take an entry, this is a good entry with stop loss this. 9166 is the entry, and 9123 9130 is the SL. So hardly 40 points SL for a target of 60 points, 60 points, 80 points. What is the level? 9160, 9170. So 9170 to 9300, almost 130 points. Look at this, 30 point SL, 40 point SL, and 130 points target. Beautifully taken. Even if you look at this yesterday candlestick, look at this. They tried to push it down, and bulls entered, bulls started pushing it up. Then this is the first level of resistance. Bull and bear fight is there, consolidation little bit, tried to go up, again pushed it down, then hammer, then they started going up, then again consolidation. And exactly, because that was in a range, this is in a range. Now we discuss in the next sessions, because once you are comfortable with candlesticks, then I can tell you how to draw these levels. Before the stock starts moving, you can draw these levels. These are called support resistance levels, or rather supply demand zones. So once you could able to draw these levels, and if the stock is taking a reversal at this level, then you can happily go ahead, because the SL will be very, very small. See, if someone would have taken an aggressive entry here at 9123, look at the SL, it's almost 25 points. That's it. And the beautiful thing is, it delivered almost 175 points. See, in trading, as per some statistics, it says that one needs to spend some 1 year to 3 years of time to learn about stock markets. That all depends on you, how quickly you can learn. I'm talking about only learning, only to make profit. So one person to become a good profitable trader, consistent profitable trader, it takes 1 year to 3 years of time. But fortunately or unfortunately, to secure the profits, or to have a good money management, it takes more 3 to 5 years of time to learn about it. So it all depends upon how small you are reducing your loss and how big you are making your profits. If you are losing, you should lose small. If you are gaining, you should gain big. Based on that, your trading life depends. So till now we discussed about candlesticks, different kinds of candlesticks, formations, and what are the best time frames to use, and what kind of trader you are, which you need to understand, and try to select a few stocks and where you are comfortable, and try to observe them closely to understand their emotion, where exactly buyers are entering, where exactly bulls are entering, or the sellers are entering, and how it is reacting, right? And in next sessions, coming sessions, we talk about support resistances, how to take a best entry, where to enter, what could be your stop loss if your trade goes in another direction or reverse to you, how to book loss, and what should be the lesser, how to book small loss, how to make big profit. All these kind of things we discuss in the next session. So today is a Friday, so tomorrow there is no market. Hopefully everybody is there at home, and stay at home only, don't go out, and try to revise these 4 videos. Hardly it will take 2 hours of time, so just go through them one more time, practice it more, so it will become easy for you. Tomorrow I'll give you one small kind of exercise to identify the charts, and try to participate in the quiz. Okay, that will be shared in the channel, right? Good day, have a nice weekend.